Hi, this is Keith Shabbat, your friend in the mortgage business, and today we're discussing financing your dream home. In today's world, there is 5 things that you need to understand when you're qualifying for your new home mortgage, and we're going to discuss 5 of these here in detail below. Number 1 is going to be your credit history. With your credit history, there's 2 key components that we look at. Number 1 is your ability to repay your debts. Do you make enough money each month to pay all your obligations on time, including your new mortgage? The next one, and second, was your willingness to repay your debts and obligations on time. Do you pay them when they're due, or do you pay them late? If you have a bankruptcy, or a charge-off, or collection, or a repossession, discuss with your mortgage consultant the timelines that are required to pass before you can qualify for your new mortgage. But let's say you never have any credit. You're able to actually build credit and construct credit by either your utility bills, your rent payment, or maybe you have a personal loan or a car loan that you have that you make payments on time that's done privately, not recorded to the bureaus. Now the second thing is your income. Now what's important for you to understand with your income is that we use your gross income to qualify you for your home mortgage. Now if you're W-2'd, basically what we do is we look at 1 month of pay stub and we look at your previous 2 years of W-2s. If you're self-employed, we're going to look at your last 2 years of tax returns to look at your Schedule C, which is going to let us know what your net income is at the end of the year. Now what we do is we look at what you're currently paying and then what you're going to be paying in your new mortgage. So for instance, if you're paying $1,000 a month and you're going to $1,500 or $1,600 a month with your new mortgage, we just want to make sure that you're going to be comfortable enough to pay your new mortgage payment as well as your other debts that you have to pay monthly. Now the third factor is going to be your credit debts, your current debts that you currently have other than your new mortgage, such as a car loan, personal loan, student loan, auto loans, anything like that. But here's the truth. Those are not only the debts that you have living expenses, food, gas, utilities, if you have child or daycare, anything that can come up that is an expense to you on a monthly basis. Unfortunately though, when you're qualifying for the mortgage, we don't factor those debts into your new mortgage payment. But what we are looking at is the debts that show up on your credit report. What we do is we look at your current debts that you're paying other than your new mortgage payment, and we do not want to see that exceed 38% with your new mortgage payment. It can go up to as high as 50%, but you have got to have compensating factors, and compensating factors could be things like a long time at your current employment, good savings in the bank, you have several months of reserves set aside after you close on the house. Now if you're looking at finding out how to do a budget, take a look at our budget video here in the educational section videos. The fourth thing is your employment history. If you're W-2'd, we'd like to see a 2-year history of steady employment in the same line of work. If you're self-employed, we're going to at least need to see 12 months that you're self-employed as well as a tax return completed showing income that has been made, not a loss. Now the fifth thing and the final thing is sufficient cash to close. Now what's important for you to understand is you're going to have 2 things that you've got to focus on when you're buying a home. You've got your down payment and then you have your closing costs. So we need to make sure that you have sufficient funds to be able to make your down payment and then any remaining closing costs that include your property taxes, first year of insurance. But one other special thing that I think is important to have when you're set aside for buying a home is once you put your down payment and closing cost, it might be comfortable to have 2 months of payment set aside for your new mortgage, basically factoring in your principal, interest, taxes, and insurance. Now if you're interested in finding out more about what closing costs are and how to figure out what they are and how they affect you, take a look at our closing cost video. This is Keith Shabbat, your friend in the mortgage business. Thanks again.